So good evening, everyone. Thanks for joining today's webinar. The webinar is today about the taxation, NRI taxation. So I request participant and the non-residents who are attending this webinar to open up their videos. So it will be help or it will be an attractive session. So the subject of this webinar is on the taxation part for the non-resident. So non-resident, I want to clear, non-resident is the person who is staying outside India and he has some connections with the India. Either he is born and brought up in India and is for the employment or from business perspective is staying outside India. So this particular webinar is organized for the non-residents who is staying outside India. So we cover up the questions and there are a couple of myths. There are some concepts to be clear that we are going to cover up in this non-resident taxation webinar. So I request Sushant to please share the screen. Yeah. So as everyone see on your slide, it's mentioned that NRI taxation doesn't vanish with the location or the distance. It's always follow the income earned. So basic concept of the taxation for the NRI is it doesn't matter where you stay. As a non-resident, if you are staying Singapore or Dubai or the UK, it doesn't make any difference as far as income is concerned. In tax always follow the income earned. So there are tax authority always doesn't care where you live. It's always focuses on what you earn either in India or outside India. So there are a couple of myths about the taxation that today we are going to clear out. The first myth about the taxation for the non-resident is that non-resident always believe that I live in abroad, so I do not need to file a taxes in India. That's one of the myth non-resident have. The second myth is when he sell out the property in India, the 1% TDS will be applicable. That's one of another myth non-resident have. The third very important myth is whatever the money I receive as a gift is always a tax-free. That's the third myth. And the fourth myth is once I move abroad, so I automatically a NRI. So these are the couple of myths. We are going to focus on this myth and try to come up with the facts in our next agenda of the webinar. So before moving to the webinar, let me introduce myself. Myself, Dnyanneshwar Naykodi, representing Hemal Parekh and Company. We are operating in 3 cities, like one is Thane, Mumbai, and Gujarat. Right now, we have 100 plus resource with us. Right now, we handling the 500 plus non-resident clients. We are taking care of their return filing, international tax advices. We also take care of their litigations, and we also into the other areas of services like audits, then providing a GST advisories, global accounting, Indian accounting. These are the couple of areas we take care. So this is a brief about my company. With me today, I have a Sushant and Manish. They are my sales team members who are today attending a meeting with me. So thanks Sushant and Manish for supporting for today's webinar. So let's move on the next part. So what we have done, we have divided this complete webinar into the couple of questions, and by addressing these questions we try to give a detailed information about the taxation for the NRI and clearing out your concept. So that's this is a way we are going to interact. And if you have any questions about the any point, you can mention, note down, and at the end of the webinar we try to take care of your queries. So first question, what qualify as a taxable income in India for a NRI? Many of times when I came across the NRI have one basic questions, Dnyanneshwar, what is taxable for me in India? So let me clear first thing. If you are staying outside India, so India will be your source country. So whatever earn in India, it will be taxable. So what's the next question is, what is earn in India? There are a couple of incomes that's earned by the non-resident in India. The basic first income or basic example is the passive income. If you are an NRI and if you have fixed deposit incomes, then you earn the interest, that's taxable in India. If you are have an investment in equity or the debts, so if you sell out that equity or the debts, the gain will be taxable in India. And the third, very important, if you invested into the commercial or the residential property, Then at the whatever if you are let out that property, the first rent, it's taxable in India, and if you sold out that respective property, then the capital gain is also taxable. So there are a couple of these sources that compulsory taxable in India, because that's earn in India. So one thing you understand from this explanation, that if you are a non-resident, you are staying outside India, suppose you are staying in Dubai, Singapore, then whatever you earn outside India, it's not taxable in India. Only whatever the sources that uh, in India, that we need to take care from taxation perspective. So I hope you get a clarity about the first question. Then another questions we always receive, or sometime NRI overlook, is the TDS deducted on the mutual fund and rental income. As I mentioned in my first question, that we receive NRI receive the rent incomes and the gains or the income on the FD deposits. So there always a TDS deducted. But sometimes what's happened, when the non-residents settle down outside India, they never make an inquiry, never look at their Indian income. So there always a TDS is deducted by the respective agencies. For example, if you have a investment with a particular A mutual fund agency, then TDS definitely is deducted on your gain transactions. Or if your tenant will make sure he deduct the TDS as per the income tax rule. So what's our responsibility as a non-resident is to make sure that every year at the end of the financial year, you need to check it out your income tax portal, check out is there any tax deducted by the by the mutual fund agencies or the tenant, that you need to check it out and make sure you get a claim of that TDS deducted by filing an income tax return. So very important thing is you need to file the income tax return every year on or before the 31st July to claim the TDS deducted by this particular agencies or the tenant. So one thing is clear, TDS will be deducted on your mutual funds or rent income. So this is about my explanation for the second question. Third question, does the selling of the property has the NRI attract the higher taxes? So usually we receive the common statement from the non-resident, manage the 1% TDS will be applicable to the, if I'm selling the property. So I really surprised that, 1% TDS is applicable for the resident. For the non-resident, 1% TDS is not applicable. What is the next question is, what is the tax? The previous 1 year before, this tax is very high, 20% tax TDS is applicable on selling of the property. Suppose for example Sushant is selling a property in Mumbai, then his buyer will deduct the TDS at the 20%. Yes, 20% means if the Sushant is selling a property at 1 CR in Mumbai, 20 lakhs is deducted as a TDS. So his cash flow is uh, got stuck with the central government as a TDS. But the God grace, in a previous finance budget, this TDS rate got reduced to the 12.5% with the surcharge, and says it goes to something 14%. So till date, till now the rate is 14%, 1 4 on the selling of the property. So this is the highest rate. So for example, if you are selling a property of 1 CR, your 14 lakhs got stuck with the central government, and it's a buyer duty to deduct the TDS. So it's a huge amount, but don't worry, there's a one wonderful important good tool we have as a professional, that's a lower deduction certificate, lower withholding tax. We either called up as a lower deduction or the withholding certificate. So what is a withholding certificate? If you are selling a property, I suggest you to connect your consultant, professional tax consultant. He will guide you for the applying for the withholding tax certificate to the department. So these certificates help out to reduce your TDS rate from 14% to 1% and 2%. We really help in my previous experiences and my previous years to many of the non-residents to get the TDS certificate at 1% and 2%. So what's the benefit of this certificate is, you will your maximum amounts get free from the TDS perspective. So if you get a TDS certificate at a 1%, then for example again the 1 CR property you are selling, then 1 lakh got blocked with the government, and other amount you are free to repatriate, provided subject to the other income tax rule. So so one thing is clear, for the selling of the property, higher taxes there, you need to careful, you need to plan your selling of the property activity, you need to consult well in advance when you are traveling to India, how you are taking care of the power of attorney and other activity. You need to talk with your professional tax consultant and along with the lawyer. That's my suggestion. And very important thing, while filing the lower deduction certificate, income tax officer always observe or check it out your track record, whether you are filing an income tax return or not. If you are not filing an income tax return in India, you are not a good taxpayer. You are not a good taxpayer, so he will not look at you as in a favorable way. He always push you for the return filing first, and then he will consider your application for the lower deduction. So I always request my non-resident clients, every year please file your income tax return. That really help you in such a particular activity for getting a lower deduction certificate. So I hope you get a clarity about the selling of the property as a NRI. One thing is clear, higher taxes on this, 14% right now. This is a general question we every day we receive. Which account should maintain as a NRI? So what I observe, there are a couple of good general normal citizens who get a good opportunity outside India and they travel outside India and they never aware about what account to be maintained. They just continue their saving accounts. So one thing is clear, once you declare your status as a non-resident, you need to maintain the non-resident ordinary account and non-resident external account. So what is this E and O? So NRO account is for your Indian transactions. If you are getting a rent, if you're getting a passive income that need to be deposited or that need to be carried out via NRO account, non-resident ordinary account. And in respect of your NRE external account, if you're getting something from outside India, that should be via NRE account, non-resident external account. So that's one of account you need to maintain. These two accounts you need to maintain. You should not carry out any transaction via saving account. And very important point is here is if you're transferring some funds from NRE account to outside India, you need a 15 CACB certifications from the chartered accountants. So if you are planning to transfer some funds from India to outside India, make sure you associated with the chartered accountants, because chartered accountant certificate is needed by the bank for transferring the fund. And so this is a very important point. And again, return filing is must for taking care of transferring the fund. So these are the two accounts you need to maintain. So very important questions. What are the tax implications when you move back to India, and what are the foreign assets need to be disclosed? So these are the two questions very important when you plans to permanently come back to India. What are the points to be take care? The important point is when you are planning to come back to India, check it out your accounts in India, whether they're active, inactive. The second very important point is insurance. Many of times we get an insurance as a non-resident perspective, and we are going to be a resident. So check it out your insurance advisors. We need to make any changes in your insurance. And I always recommend, suppose for this calendar year 2025 to 26, if you are planning to come back permanently to India, please travel after the November or December, so you will not complete the 182 days in India. So you will be a non-resident for this particular year, and from next year you will be a resident. For 2026 will be a first year as a resident for India. If suppose you travel, or you decided to travel in this particular month permanently, then you may be land up with the position of dual residency. So what is a dual residency? You will be a resident of India and also a resident of the outside country. For example, I am traveling from Dubai this month and permanently I'm going to stay here, so I will be called up as a resident for the both country, and that will be a critical situation for as a citizen. You need to report to the both country, and it will be a critical position for you to from the reporting perspective. So I recommend when you are traveling permanently move back to India, try to schedule either in the November or the December. The next very important question is, what about the foreign access to be disclosed? So this is one of the rule central government has announced considering the black money. So to take a control or take a track of the black money as per the Black Money Act, any resident having a foreign assets, either the investments in a movable or immovable property, need to be disclosed in the income tax return. So if you are coming back to India and if your residential status is resident, make sure if you have any property, any investments outside India, to be reported in your income tax return. Why it is important? Because if you miss this opportunity to disclose this particular income or assets into the income tax return, there is a penalty. And can you guess what's the penalty? The penalty is a 10 lakh rupees. You will charge the penalty by the income tax department 10 lakh rupees just by missing a simple thing of reporting your foreign assets. Last couple of years we have received the notices from the international tax department for a couple of our clients who fail to report their foreign assets, because sometimes they feel that it's a easy tax and they use the outside softwares and they file their own returns, and sometimes they miss this options and they receive the notices from the department, and it's very difficult for us to explain the what's a major uh, challenge for the our client to report this particular transactions or asset at that moment. So I recommend take a professional advice while filing your income tax return, and make sure you report your foreign assets properly in your income tax return, because 10% 10 lakhs is the penalty for non-disclosure. So that's a very important point from foreign assets perspective. Next question. So how does the double taxation avoidance agreement work and foreign tax credits? So DTA, I think some non-resident or some audience or participants are observing or looking this word for first time. What is a double taxation agreement? So one thing is clear, it's an agreement. So the next question is it's an agreement between whom? So that this agreement is between the two countries. The one very important point from international tax perspective is any income earned in a global is taxed at a one time. It should not be taxed two times. So suppose for example Sushant is residing in Singapore, and if he earns particular income either in Singapore or the India, it should be taxed one time. It should not be double tax. So to avoiding the double taxation and to having a good relationship between the two countries, these agreements that sign up between the two countries. For example, we have a agreement with the Singapore, we have an agreement with the Dubai, we have an agreement with Australia. So when we filing or we providing advisory to non-resident, we need to check it out the this kind of agreements, what's mentioned in this. Is it any we need to check it out the content of this agreement while by giving advice to the client. So that's a double taxation avoidance agreement. So what is the use of this double taxation avoidance agreement is it will be a we whatever mentioned into the domestic law or income tax law, uh, the DTA will be applicable first. For example, if the Sushant having a capital gain in India, and as per the, I'm just taking example and assumptions. If the Sushan having a capital gain in India, and if the tax rate is mentioned 20%, and in a Singapore, it's as per the agreement, resident country and a source country, if it's mentioned the capital gain should be taxed at a 10%, then 10% will be applicable, not a 20%. So DTA will override the domestic law or the income tax provision. So these are the very important document to be check it out while providing advisory to the non-resident. So that's a very important point, DTA. Now, what is a foreign tax credit? So last question we talk about when you come back as a return as a permanently, and when you become a resident, and suppose any income you are earning outside India, and if any taxes paid outside India, you are eligible to take the credit of this in India. So again, I take an example. Suppose the Sushant's come back in August month, August 2025, and in outside India, in Singapore, if he is a salary person and payroll department has deducted his TDS as per the Singapore taxation, then he is eligible to take the credit of respective taxes to avoid the double taxation. So that's a foreign tax credit. But the very important point about the foreign tax credit is you need to submit a form 67 before filing a return. Otherwise, you are not able to get a credit. So what is a 67 form? It's a simple form where you give a declaration, give a brief about the what about the taxes you paid in Singapore, or outside countries, and that's a give a brief about this in that form 67. But very important thing is you need to submit a form 67 before filing the income tax return. We came across many of the non-residents who file their return, but they fail to submit a 67, and at the time of the scrutiny or at the time of processing their income tax return, department rejected their claim for the foreign tax credit. And second very important thing is you should take the evidence from the respective revenue authority about the taxes that you paid outside India. Like in India, we get a evidence of the Form 16A, Form 16, while you deduct the central government when they deduct the TDS. So you need to maintain the evidence for the next 5 to 6 years after claiming the foreign tax credits. So I hope you get a clarity on this, how the double taxation avoidance agreement works, and about the foreign tax credit. Are the gift received by the NRIs taxable in India? So we always receive question from NRI that Nanish, I receive a gift. Is it taxable in India? It's a simple rule. If you receive the gifts from a relative, it's non-taxable. Either you receive outside India or within India, it doesn't matter. Important thing is you should receive a gift from the relative. Otherwise, it's taxable in India. So next question. So filing of the income tax return. So many of times, non-residents give me a statement that manage there is no need of the filing a returns. My income is below exemption limit. We have an exemption limit of 3 lakhs right now. So there is no need of the filing the returns in India right now. So my request to each and every non-resident is either your income is below exemption limits or above exemption limit. And as per our last 20 to 25 minutes discussion, one thing is very important. Reporting is very important from the taxation and claim perspective. So I always recommend to the non-residents or who are staying outside India, if you have some source of income in India, don't think about the taxable or non-taxable. Make sure that you file your income tax return in India on or before the 31st July. I will give one of a classical example. One of my client is from the Dubai, Mr. A. He is having a good perfume. He have 100 plus CR turnover in Dubai. He's running the perfume manufacturing company, and he have some attachment with India. So whatever he earn and whatever he save, he always put into the real estate in India. So he have properties in India more than 20 he had properties in India. So what government has observed, why has he always, when he bought the property, he do a stamp duty registrations, and his transactions reported on the income tax department as a high value transaction. So one day he has received a notice from the investigations department that we observe that you have a PAN in India, but you don't have any records in India. From the taxation perspective, please attend our office and explain why should not we consider it as black money or hawala transactions. So what we have done, we then he approached me, and then we represent this case properly, and we give a detailed information about his sources outside India, give an explanation about why it's not taxable in India, and we take care of his compliances and queries from the investigation department. So point is, you should file your income tax return on time so you can avoid the knocking door from the department. That's very important. Otherwise, there will be a litigations and time consuming litigation process that you have to face at a later stage. So better to file a return on or before 31st July. So this is, I think, so this is our final question.
We have a couple of questions in the chat box. I will take them one by one. I'll ask you that and you can just respond. I would request other members to drop their questions in the chat box so that we can take care of it here itself. The first question is from Mr. Yogesh Bhagat. Now, lower TDS certificate may not be much benefit as now there is indexation benefit. Please clarify.
I think so. I got a point. He talking about the
Which
lower
question?
deduction certificate. So Mr. Yogesh, so point is, I agree that either we should take an advantage of indexation or without indexation. That's a point of the computation. But when the buyer make the payments to you, the simple rule is central government tell the buyer that, look, you are buying a property, you need to deduct the TDS. And deducting a TDS, he follow the income tax rule. And as per the income tax rule, is rate is 12% plus says it goes to 40%. So that moment, computations not comes into picture. He straightforward follow the rule. So before as I mentioned, you need to produce the lower deduction certificate, then only his chartered accountant will convince for the reduced rate. Otherwise, without indexation or indexation, that comes into picture while filing the return. That will not be a point of discussion at the selling of the property. Even if you have a loss in a capital gain, it doesn't make any sense at that moment.
Okay, we have second question from Yogesh Bhagat sir only. Whether CA certificate is required for transfer from NRI accounts. It is a remittance account.
Good question. As per my understanding, there is no need of the certificate for transferring the within a NRO NRE account. But what I observe, banking, as per the previous or practical experience, banking banks relationship manager or the respective department may request for the particular certificate, uh, 15 CACB, even internal transfer accounts. But I don't, as per my knowledge, there is no need. We provide an explanation, but as per their internal requirement, they push for the certificate.
Okay, we have another question from Mr. CA Manzoor Hassan Sheikh.
Hmm.
Disclosure of foreign asset is compulsory for residents only. Whether NRI is also required to disclose.
Yeah, I agree, Mansoor. It's clear that foreign asset disclosure is to be required only by resident. If your status is resident, you should declare your foreign asset. Otherwise, as a non-resident, you doesn't need to disclose about the foreign assets. I agree with you.
We have a question from Mr. Praveen Fanse. Which country agreement is not signed? I believe he's
Uh,
talking about DTAA agreement.
DTAA, yeah, I agree. Right now, I'm not recollecting the name, but Pravinji, I will share with you the in detail on your email ID about the countries with we do not have an agreement. So, good question by Pravinji. If we do not have any agreement with the particular country, it means income tax law will be applicable. Then there will be a chances of double taxation. But there are selected countries with whom we do not have a detailed agreement due to the not having a good political relationships. But Parmiji, I will share with you the list of the countries. Sure.
I believe we have this many questions only.
So, Sushant, I think we have a Google feedback form.
Yes,
You
I
can put
have
it a
one
light
more
up.
question from Yogesh Bhagat. Can we take this?
Yeah, we take a last question here.
Please confirm that cost indexation benefit option not available to non-residents.
I think so. We will get back to you, Yogesh. Sushan, I think so. We have a Google form. What we have done, participant and non-resident, we have a detailed. We are providing a 20 minutes one-to-one session with us for clearing out your doubts. So if you have any doubts, we have an email ID, and also Sushant is sharing the Google form. You share the your feedback or your queries. We will have a 20 minutes free sessions for you. We will try to address your queries in that particular free session. So that's a one of a what we can say opportunity or the option today for the attendee or participant.
You can just go through this particular form. You can mention your details and you can drop your question queries you have. We will definitely take this up in one-on-one session. This 20-minute session with you.
Jayan sir, I have a one query that rented properties, it's compulsory to tenant should deduct the TDS. Sir, yes, for the rented property, it's a compulsory, but because of 195 section, there is a no any limit or TDS. Like for the resident, there is a particular limit for up to which no TDS will not be deducted. But for the other non-resident, 195 section will attract. So lower deduction is a good option, sir, for avoiding the highest TDS rate. So we have shared the form in a chat box. If anyone have a query about the taxation webinar or looking for a free 20 minutes session with us, you can submit the form. Sushan will get back to you.
Okay, so if we have any further question, you can just drop in the chat box, or we'll end this session in next 2-3 minutes. Mr. Praful Bansal has raised his hand, so we can take his
Yeah,
question. Mr. Praful, Praful, you
Parul,
can
Parul.
unmute yourself.
I think Parul is there. Yeah.
Parul, Parul, I'm so sorry.
Yeah, Parul.
यस, मेरा एक क्वेश्चन है। जैसे एक पर्सन है जो इंडिया का रेजिडेंट है वैसे तो, और उसका थाईलैंड में भी बिजनेस है, और वो अराउंड 180 डेज इंडिया में रहता है, और इंडिया में उसका जो एज ए सोल प्रोप्राइटर बिजनेस है वहां पर उसकी इनकम भी 15 लाख से ज्यादा है, 1 करोड़ के आसपास वो प्रॉफिट दिखाता है इंडिया में। तो उसका
हम्म।
स्टेटस रेजिडेंट है या एनआरआई, वो कैसे कैलकुलेट होगा? और थाईलैंड में जो इनकम अर्न कर रहा है, क्या वो उसको अगर रेजिडेंट है तो इंडिया में दिखानी होगी?
जितना मुझे समझा पारुल जी के थाईलैंड में वो बिजनेस कर रहा है और इंडिया में 182 डेज से ज्यादा ही हैज अ स्टे। तो
हाँ।
पहले तो रेसिडेंशियल स्टेटस उसका पासपोर्ट ही चेक करना पड़ेगा, इन एंड आउट। अकॉर्डिंगली वी विल अंडरस्टैंड whether he is a resident or the non-resident, and if he is a resident then उसकी थाईलैंड इनकम भी उसको रिपोर्ट करनी है, and global income will be taxable in India.
तो एक
Provided if you have any company there and he is just an individual, we have to check कि उसको कुछ particular income पे आउट हो रही है क्या।
थाईलैंड में उसने कंपनी इनकॉर्पोरेट की हुई है, उसमें एज ए पार्टनर डायरेक्टर में जो भी डेफिनेशन डेफिनेशन है
हाँ,
वैसे
तो
ही
उसको
है वो।
थाईलैंड के कंपनी से कुछ पे आउट हो रहा है क्या देखना पड़ेगा।
नहीं, पे आउट तो नहीं मिल रहा है, वो कंपनी में ही आ रहा है जो आ रहा है वहां
हाँ, तो
से वो।
कंपनी इज अ डिफरेंट स्टोरी।
हम्म।
कंपनी की स्टेटस अलग से चेक होगी, उनकी स्टेटस रेसिडेंट है तो
हम्म।
फिर वो चेकआउट करना पड़ेगा क्या रिपोर्टिंग पॉइंट्स है और क्या टैक्सेबल है। टैक्सेबल तो वही होगा जो उसको पे किया है।
जो उसको पे
हाँ,
की।
सो बेटर टू अवॉइड टेक एनी फंड्स और एनी पे आउट्स फ्रॉम दैट पर्टिकुलर कंपनी।
तो ये एनआरआई के केस में एक ये पॉइंट पढ़ा था मैंने कहीं कि 15 लाख से ज्यादा अगर इंडिया में इनकम है तो वो 120 डेज ही चेक होगा, 180 डेज नहीं होगा। तो इसका वन
हाँ,
ट्वेंटी डेज से चेक होगा।
हाँ, लेकिन वो इंडियन इनकम हो गई ना सर, वो इंडियन इनकम की बात कर रहे हैं।
हाँ, इंडियन इनकम ही है
वो
1 CR उसकी। इंडिया में प्रोप्राइटरशिप फॉर्म है उसकी, उसमें आ रहा है इनकम।
हाँ, तो एज पर रूल सेक्शन 6 और 9 के को इंसिडेंस में हमें चेक करना पड़ेगा उसका।
अच्छा, ठीक है।
Okay,
कोई
we have
क्वेरी होगी तो मैं 1 to 1 ले लूंगी आपसे।
हाँ, और जो हम 1 to 1 में लेते हैं बिकॉज सम पॉइंट्स हम डिटेल में बात नहीं कर पाएंगे।
ठीक है सर। थैंक यू।
one more question from Mr. Yogesh Bhagat.
यस।
At what rate dividend taxable for non-residents?
Dividend, I think, as per my understanding, 20% is the TDS rate, is taxable in India, Indian taxes.
Okay.
अह, योगेश जी, आप आपकी क्वेरीज भेज दीजिए, मैं 1 to 1 में आपसे बात कर लूंगा। Done. I think, Sushan, we end up at this stage. I really thanks everyone for joining and giving a valuable time for attending the webinar. I hope आपके doubts clear हुए होंगे. Thanks for joining. We end up webinar shortly.